We've been sort of batting around the idea, are central banks going to hike into a peak or a plateau? What do you think they're going to do? And then what's the knock-on effect of housing? Because in what you're saying, the 5% level becomes very sensitive for home buyers. So if there's a real peak in rates, that's going to have a dramatic effect on the housing market again.
Well, my sense is that inflation's coming in. I mean, in the case of inflation in the housing market, the most direct link is through rents, market rents. So, we're looking at the single family market today. It's really about apartment rents because that drives the measurement of inflation, consumer price inflation, CPI inflation. And rents are down, and we're going to see more weakness there because we've got a lot of multifamily supply, apartment supply coming into the market. I mean, last week, for example, we got the housing starts number, data point in there said we've got almost 1 million multifamily units in the pipeline going to completion. They got bottled up because of the pandemic and the supply chain issues and the labor market issues. And those units are going to be constructed. That's going to cause vacancies to rise, rents to soften, and that means inflation is going to come in. So in my view, what's going on in the housing market is, given where rates are today, is sufficient to get inflation back down to something that I think the Federal Reserve should feel comfortable with. So I don't expect any. There may be another rate hike or two, but not more than that.
Comfortable enough to cut, but Mark, the point is, do we go up and stay up? Right. Yeah. Okay. So this is a plateau rather than a peak. We're not going up and coming straight back down again. We're going up and we're staying up.
Yeah, unless we go to a recession, Guy. I mean, if we go into recession, then they're going to be, focused on employment and unemployment, and they'll start cutting interest rates. But I don't think that's going to happen. I think we're going to make our way through without one. It's going to be a bit of a struggle, but in that kind of no recession world, slow session world, I think interest rates remain high. They keep the funds rate target 5% plus, well into next year, and only begin to cut when it's, very obvious that inflation is back to their target, which could take some time.